Today I will be speaking about petty cash. Petty cash is the small amount of cash that is kept on hand by a company to pay for minor, inexpensive purchases during the normal course of operations. The size and scope of the fund will differ between businesses. However, all businesses will follow the same operations of establishing the fund, making payments from the fund, and replenishing the fund. Sarah owns a chemist and decides to establish a petty cash fund of $100. A fund is established by writing a check for the amount of the fund, then issuing the check to a trusted custodian. As illustrated, this entry increases the petty cash fund through debiting $100 and decreases cash by crediting $100 as well. Ultimately, no change in total assets has taken place, simply an amount has been designated as petty cash. Some days later, a customer enters the chemist and requests a certain medication. Sarah attempts to record the customer's information in her diary, however, she discovers that it is full. She requests her assistant to run to the nearest supply store and purchase a new one using cash from the petty cash fund. Sarah's assistant made sure to collect the receipt for her purchase. This purchase will not be recorded in a journal immediately. Journal entries are recorded only when the fund has been replenished. The following report illustrates what has just taken place. The assistant has used $12 from the petty cash fund. Therefore, a $12 check is needed to replenish the fund. Assuming no other purchase has taken place by the end of the month, Sarah decides to make journal entries. Sarah increases the expense account related to the expenditure and decreases the cash account by the amount of the check. This will take place each time the petty cash fund is replenished. Thank you very much for listening, and I hope this was helpful.